Welcome back to the Hunter of Dividends YouTube channel here. I know it's been a couple weeks. Just came back from a vacation at Disney World, trying to get a little bit reacclimated to real life, I'll call it, after being at the most magical place on earth, as they would say. My kids wanted to stay longer. We had a good time, but it's good to be back, and I'm glad to be back in the saddle, certainly. So let's talk here about top four forever stocks. I want to talk about stocks that I want to buy and hold forever. These are not stocks I'm looking to sell. These are stocks that are stocks that I'm comfortable holding through anything. You see what's up here. First is for me to talk about Johnson and Johnson. If you know me very well at all, you know that I love J&J. This is my biggest holding in my portfolio. It has been for a long time. This is one that I've owned for over 20 years, going on 25 years now. And J&J, I don't think there's a bad time to buy J&J. It's such a company that is just so many different aspects to it. It's almost like getting an ETF in one. I think J&J is a fantastic company. So I want to take a look here at J&J on Simply Safe Dividends. So let's take a look at Simply Safe Dividends, J&J. This is my number one of the four forever stocks. Beta 0.31, always going to have a low beta with Johnson & Johnson compared to the market. Dividend growth, most recent 6.6%. Dividend safety score 99, not surprising. Dividend yield of 2.59%. Payout ratio 42%. You see that the most recent forward PE ratio is 17.2, which is right about what it's been for the 5 years, and is about the same as the healthcare industry. I do believe J&J should trade at a bit of a premium as compared to others. We know its credit rating is tremendous. We know that J&J has a very, very pristine balance sheet. So 42% earnings payout ratio, 56% free cash flow payout ratio, excuse me. Pardon me, my allergies are acting up on me here a little bit today, but I still wanted to get this out. So the earnings payout ratio, free cash flow payout ratio, certainly very encouraging that they would be able to continue to raise the dividend year after year as they have. Dividend king here. So we see that they have consistently grown their dividend year after year, many, many times. And with the 99 safety score, they believe they'll continue to be able to do that. Does Simply Safe Dividends. I like the earnings per share growth, the 1 year being 2020, that they did not grow. That was the COVID year, certainly. You're not going to see massive growth, I don't think, from J&J, but I think you have tremendous safety. I know with the spinoff here, J&J, there are some unknown as exactly what will happen next. Compared to the past few years, there's a little bit more unknown, but I think J&J is just such a well-run company. You're going to have plenty of value coming out of this stock. This company, fantastically run. The ROE here, 30% return on equity. The shares outstanding have gone down a bit. Sales continually been climbing. Free cash flow margin and operating margin way above what you would expect. And when it comes to debt, I mean, this company is in fantastic position. Interest coverage, 138 in 2021. What more can I say about Johnson & Johnson? That's my first one of the forever stocks. The second one here, and I'm going to bring this one up so that you guys can take a look at this one on Simply Safe Dividends as well. My second one is Lowe's. I like Lowe's quite a bit, the home improvement retailer. 2.2% dividend yield, 31% dividend growth last time around. I mean, just a fantastic dividend growth. Payout ratio is so low at 26% that they have tons of room to continue growing this dividend, and they're showing that they really want to grow this dividend. I think they will continue to do so. We've seen massive earnings per share growth here of late. I do want to say I don't think they can keep growing at this kind of pace, and there may be some tough sledding coming ahead if there is a recession, and I think recession is coming. I mean, we see the the economic signs pointing to a recession being the case. But I think that Lowe's is the type of company that Lowe's is going to be able to withstand that recession. If you go back and look at the recession return from last time, 52% loss, 55% for the S&P 500, and recession sales were only down 3.3%. I like Lowe's quite a bit. They're really committed to paying back that dividend at this point. Their debt level is not bad. The interest coverage at 13.6. They have really been buying back shares pretty drastically. Sales been going up a lot. I think Lowe's is a really good name for the long term. I think Home Depot is a good one as well. I think there's plenty of room for both of these names, but Lowe's is my favorite based on their ability to raise the dividend more from here. I think this is a really good dividend growth play going forward. So Lowe's is my second of the forever stocks. The third of the forever stocks here for me is ticker symbol LMT, Lockheed Martin. Lockheed, the aerospace defense, 2.76% dividend yield, 84 dividend safety score. This is a company that, I wish that wars and conflict wasn't so constant, but I don't see it going away anytime soon. And defense spending continues to be high, regardless of whether it's Republicans or Democrats in office. Lockheed at a 14.9 PE. That's lower than its average over the last 5 years. It's also lower than the average for the sector. I think Lockheed's sitting in a pretty good spot. I did buy this at lower levels, and I haven't bought as much of it recently, but I think this is a really good buy and hold for a very long time. Like I say, forever stock. 41% dividend payout ratio, 38% free cash flow payout ratio. So plenty of room to grow. Their earnings have grown very quickly here in recent years. I think this is a stock that a company that should continue to do very well. We see the margins here certainly lower than they are in some of the other ones that we were looking at. The return on equity is very good. Interest coverage 13.75, which is very safe. I think Lockheed's a good stock here for a long term. It may have a little bit more dips and unknown times than, say, a J&J, but I think Lockheed Martin will be a good stock here for the long term. Aerospace defense leader that I don't believe is going anywhere anytime soon. And then last but not least, I want to bring up here one where I'm going to look at, let's share the other screen and I want to bring up the other tab, because in this one, it's not going to matter at all whether it is whether it's a dividend payer or not, or what Simply Safe Dividend says about it, because it's not a dividend payer at all. And that is Alphabet, Google. Look, I know I'm a dividend investor, and here we are, the Hunter of Dividends YouTube channel. But I have to say, some dividend investors just are totally anti-growth stocks, totally anti anything other than dividend stocks. Will Google pay a dividend at some point in the future? Long time out, probably yes, and no time soon, certainly. I think Google's a really good buy long term. This is a stock that it's actually my second biggest holding right now behind Johnson & Johnson. It won't surprise me if it ends up becoming number one if the stock market drops again. I think Alphabet just has a lot going for it. Let's take a look at fast graphs here quickly to see what it looks like from a valuation standpoint. This is the average that people have been paying for it as far as adjusted operating earnings. The blue line would suggest that it should be at a price of, say, $125, $130 per share right now. We are at $113 instead. Alphabet, Google is just really, really has a great spot. They have google.com, they have youtube.com. They are so entrenched right now that it's hard for someone to really mount big competition to Google. And I think that people are a little bit sleeping on this one because the growth is still very fantastic. And the PE, a blended PE of 21.36 for Google, this has gotten really cheap. I mean, and now the other thing is, I know a lot of people said, well, I don't want to buy it when it was, $2,000 per share and more. But now you have the stock split. and it's just a little over $100 per share. That makes a big difference, certainly. And I think that this is one that you would want to keep on your radar. Let's take a look at sales from a historical standpoint. This is once again looking like a cheap stock, price to sales on an average standpoint. Let's look at forecasting out. If you forecast this out, analyst forecasts, we're looking at a rate of return of about 20% through 2024 from a sales standpoint. If you look at cash flow, let's look at cash flow. We're looking at about 13.3%. Adjusted operating earnings, this one is a little bit more in the south, not looking as good. And the average here would be negative 2.4%. If we look all the way down through here, in general, you're going to find a lot of good numbers. EBITDA here, this one is 33% annual rate of return. In general, you're talking about a company that has a tremendous position in the marketplace, and they're not trading at a high valuation right now. 21.36 blended PE for Google. I think Google is a good set it and forget it company going forward. I mean, this is a really, really good name, trading at a discount. It's not a risky stock. This is not one of those high flyers that you have to take a risk on. They're already making massive money. They'll continue to make massive money. Will there be downfalls from time to time and be big corrections? Of course there will. But if you're willing to ride those out, I think Alphabet, Google, ticker symbol GOOG is a very good one. So again, my 4 forever stocks: J&J, Johnson & Johnson. The second is Lowe's, LOW. The third is Lockheed Martin, LMT. And the fourth is Google, GOOG. And those are not necessarily in my favorite order. Google would have been higher in the list than number 4 there. I have to put Johnson & Johnson number 1 because I just love the stock, love the company. But I think Google would be number 2 on my list. So there's my 4 forever stocks. What do you guys think of this? Which 4 or 5 stocks would you guys list as your forever stocks that you want to set it and forget it, never sell them? I don't want to hear about those in the comments below. Certainly, if you have any stocks that you want me to take a look at, either from a valuation standpoint on fast graphs, or if you want me to analyze these in any way, drop them in the comments below, or follow me on Twitter at Hunt Dividends, and let me know what you're looking at, what stock, and I'd be happy to cover it here. I already did cover one with JP Morgan. You can look at that below as well. Subscribe to this channel if you haven't already, and give this a thumbs up if you like the information. Appreciate all of you tuning in, and I hope you guys have a great rest of your week. I'll be back with some more dividend videos again soon. Take care.